Hey traders, this is Brandon back with another video. Today's video is going to be a little bit different. I'm going to discuss more regarding swing trading or stocks that you can hold and potentially make money on the upside or downside as they break out or break down. So this is not going to be a day trading lesson. It's more going to be for swing trading. So people that may have jobs or can't be in front of the computer, this is a great opportunity. And then I'll even show you how you don't need a lot of money to start swing trading. So what I've done is I've conducted a search on all the potential stocks this week that I think have the potential to make big moves. And I'm going to go through 13 stocks that I've looked at that I think have the potential to make moves. Disclaimer, this is not me saying to buy these stocks, it's just an idea. These are all ideas that have the potential to make big moves. So as we've seen, the tech sector is doing really well. I mean, just take a look at a stock like Apple. It's basically just shot straight up from when we were in the middle of coronavirus back in March when everything dropped till now. It's made a huge move. So Facebook is one stock that has been moving. It dipped and now it's ready to, looks like, potentially break out again. So if you look at the last few days, it keeps touching this 247.65 level and breaking down. It kind of hits the level, breaks down, hits again. So this is 4 days in a row. So I'm looking to see a continuation to see if this can break and get above 250. So this is definitely going to be high on my watch list this coming week. Now, normally, let's say you wanted to purchase 100 shares at the break. So you would have to have, let's say you wanted to buy it at 248. Let's say you wanted to buy 100 shares. So that would cost you almost $25,000. Now that is obviously a lot of money. So if you're new to day trading, or I'm sorry, if you're new to just any type of trading within the market and you're looking for something with a less expensive option, the better option would be, no pun intended, options. So a website like Robinhood is super popular, and so here I can go ahead and show you Facebook. And so if we were to look this week, so these are options that are expiring Friday. So options for larger companies expire every Friday. So if you look down, they expire every Friday, and the closer you are to the expiration, the higher volatility, so the more the stocks can move up or down. So that's why I mean, you can use some later dates which are going to be more conservative, but if you use dates closer to this coming Friday, the closest Friday, that would be the highest volatility, so the best chances to make money, but obviously on the flip side, the higher chance to lose money. So if we were to look at Facebook, and let's say we think it's gonna, or actually I would say we would wait for it to break out, and once we see a breakout, you can buy, let's say, the 250 or even the 245 options. So just as an example, if you were to buy one contract, that would cost you $525, and that one contract is the equivalent of owning 100 shares. So if you were to buy one contract at $525 and the stock moves in your favor, this premium price is going to move up, and so it can move up closer to $6, $7, $8. So now you're making $200 to $300 on your initial investment. So if you're investing $525, you could potentially make $200 to $300 if that stock continues to move up as it breaks out. Now that's of course using one contract. So let's say you don't have the $25,000 to buy 100 shares, but at the same time you want to invest a little bit more, you can always just buy 2 contracts, or you can buy 5 contracts. And so you can see the price that it would cost you. And so of course if the price goes in your favor, that premium is going to go up in value, and then you can sell that for the difference and make your profits that way. But of course keep in mind that if the stock does not go higher and it goes lower, you can sell for a loss, or if you hold on to Friday, unfortunately those contracts will be deemed worthless and you will lose your entire investment there of whatever you decide. So options, I'd like options for trading, day trading or swing trading. higher price stocks rather than investing 25,000. I can invest 1,000 or so and just hopefully, get that breakout, buy and sell within a day, 2 days, and you can also day trade that as well. So this is how I would recommend swing trading, especially for someone that just looking to get in, doesn't want to lose a lot of money, because obviously when you first start out, there's a high chance that you unfortunately may lose as you learn. So options is a great way where you don't have to invest a lot. So the first stock, like I said, is Facebook, which I think has a potential to break out above this 247, 248 level. The next stock is going to be CRWD. CRWD. You can see here it's moving up. There's a resting bar, and so this week I want to see if it gets above this 118 level. If it gets above this 118 level, it should continue higher. So this is a pretty straightforward one. There's not a lot of pattern here. It's just basically shot up, resting. So let's see if it pulls back further, and then we'll look for a breakout above the 118 level. Costco has been doing really good as far as in the news lately, as far as great revenue. With everything going on, people are stocking up on food in large amounts. So here we have a previous high and what we call a wedge pattern. It broke out of that wedge pattern, and as you can see, moved up. And so here is another resting bar. So it went up, kind of pulled back. This is what we call like a resting bar. So I want to see if it's going to pull above this 328, 330 level, and that could be a potential idea to get in and ride the momentum even higher. FedEx is another one. So FedEx, it gapped up, and now you can see it's consolidating. So, and you can see that it hit this level a few times around 160. So I like to see it break above 160 with potentials up to 165 and perhaps even 169. As you can see, there's some resistance here. So FedEx is another opportunity. Look to see if it can break that 160 level. Of course, with consolidation, you have to be careful because it can break out, but it can also break down if it falls below the, let's see, the 153 level. So this is another one to keep an eye on as well. A couple of my favorites are going to be HD and Lowe's, which are very similar patterns. Lowe's is by far the best. Similar to Facebook, I think this has huge potential. As you can see on this red line here that I drew, it's been just trending up and kind of bouncing off this level, breaking down, coming back up, and look how it's kind of squeezing here. So I'm looking to see if this can get above 138, and that would be a great opportunity to buy. HD is similar, obviously similar company, and it looks like it's also has this wedge pattern form where it looks like it may be breaking out. So I'm going to be looking at HD, Lowe's, and Facebook very closely. Lulu is another one where it had its highs, kind of bounced back, retraced, consolidated again here, and so I'm looking to see if it can get above the all-time highs here at 324.76 and continue higher. So that's going to be another one. This is actually one where this is definitely, you can see the line in the sand right here where sellers stepped in and rejected Myrna at at $67. As you can see, it tried many times to get above $67, and so I want to see if this can break back above $67. If it does, it has room all the way back up to 87. And Myrna is in the pharmaceutical biotech stock, so just be cautious with that. If they get bad news on a particular vaccine, let's say related to COVID, that's obviously going to make a huge drop. But on the flip side, if Myrna comes out with great news on a particular drug, that can shoot it up as well. So biotechs, always be cautious with those. NVAX as well. NVAX is actually the opposite. So this is looking to break down. I see a potential breakdown here back to the gap. So as you can see, it gapped up, and now it's basically been just trending lower. And this is a really ugly bar, a really sell-off bar here. So I like to see it if it can break below 93. Let's see, the low here was 93.50. So anything below 93.50, we may have potential to about $89 for the first target. The overall trend though is moving up, so this may just retrace back. So that's an option to buy, or I'm sorry, to buy puts instead of buying calls. So buying puts is basically where you are, here's buying puts, where you're telling, you believe that the stock is going to go lower. So even though you're buying something, you're buying the puts, which means you think the stock is actually going to go lower. So here's one example of a stock that I believe may go lower in the short term. Qualcomm is another tech company, and as you can see here, it is kind of keeps hitting this level, keeps getting rejected. So I'd like to see it break above about $94. If it can, it has room to all-time highs at 96 and potentially higher than that, because you can see also the overall trend has just been going straight up or angling up for the most part since the middle of March. So this would be another look this week to see if we can get above 94. A couple more here. Shopify. Shopify has a really strong look here, trending up, consolidating. Looks like a kind of like a flag pattern here, or ascending triangle, and we're looking for a break above 1060. Again, the great thing about this is you don't have to worry about buying a stock like this, because 1060, let's say you wanted to buy 100 shares, that would cost you over $106,000. But again, if you wanted to get in on the options, so let's say you think once it breaks above, let's say 1060, so we can take a look at that. So that would be for Shopify, and we can look at the options here. So the 1060, so this is still expensive relative to other options, but one option would cost you $2,430, and as it moves up, you can potentially start making $200, $300, $400, $500, $600 on these options. So there's definitely a lot of potential. So Shopify is another one. Spotify would be another option. This has just been moving up, so there's really not much analysis on this other than the fact that it's moving up. There's a slight resting bar here in between, so we're looking to see if I can get above 280 for a potential move higher. Although this does look a little bit stretched, but this would be on the watch list. And then finally, Walmart. Walmart actually was a great opportunity to buy actually on Friday. You can see here it shot up, a couple of resting bars, and then once it broke above, you can see that it went from about 128 up to 131. So that would have been a huge opportunity there. It's still in this middle area here, where there is potential to move up to 132 and potentially break new highs. So I'm going to be watching Walmart as well. So those are the 13 stocks that I'll be watching. I hope you guys watch them as well, because there's definitely potential to make some money here in these stocks or playing the options of these stocks as well. So I hope this helps you out. Feel free to reach out with any questions, leave likes, comments, subscribe. I'll be more than happy to be making these in the future. Have a great day.